As I discussed in the daily financial news from June 26th, I believe the housing crash in transactions that I called successfully 4 years ago is about to be over. I believe what is happening now is the final end of the transaction crash, July and August specifically being the end. And then starting in September, we start building out of it. So again, what does this mean? What does it mean for investors? What does it mean for home sellers, home buyers? We're going to have this conversation with the one and only Jonathan from Convoy Home Loans, who is in the business daily and knows what people are doing. So, Jonathan, this is kind of counter cyclical. Again, a lot of people have just started talking about the housing crash. I think it's going to be over before they know it. And I think there's a lot of fun times ahead. What do you think?
Yeah, I think nobody watches the data as much as you do, right? From in terms of like a social media presence. And then obviously a lot of people on our side, my side meaning realtors and also loan officers, they are always trying to feed people hopium, right? A lot of
Mm.
times. And what they haven't realized is again, it's the by the time the news says something, it's already too late. Like that's kind of the situation we're running into. And we're seeing it
Yeah.
happen across the board because everything we've talked about in the last 5 months has come to fruition now, right?
Yep.
And is now starting to roll into, okay, we're already at the peak of it now. We're seeing these things open up. What's going to happen next, in the next chapter? By the time they say home prices are, or home prices crashed, everything crashed already.
Yeah, it's going to be really interesting, and I'm feeling better and better about this call because I think what we've seen already and got right was the peak uncertainty is long behind us, and as I've said since January 20th, the inauguration day, um, the first 6 months were going to be chaotic, which by the way is over in less than a month. July 20th will be the 6 month window. Why is that important? Well, if you guys haven't looked at the political calendar, the Republicans want to win the midterms. They want to keep the House, keep the Senate. And you can't have this chaotic tariff induced uncertainty crushing consumers, crushing business psychology. So we're right on the cusp of putting all of this behind us. Yes, I know about the July 9th deadline. I fully expect it to be extended, expect some wins to be put out there. But then you're going to have the big, beautiful bill or a version of that deregulation. You're going to have bonus depreciation come back in a big way. And oh, by the way, the Fed, you got some Fed presidents talking about cuts in July, most of them talking September. And you've got people like Morgan Stanley talking about 7 cuts are coming. So it is very quickly going to turn. The psychology is going to turn. Again, July and August will be bad because, again, the data will show up from June and July. That's just how the data works. And then by the time September comes, people are going to say things like, this is the strongest fall I've seen in 10 years. And, again, I'm not talking racing ahead. I'm just talking we're building out of the bottom, right? August will be the bottom. And, as I've said all year, 2025 will be rough and 2026 will be better. I think it starts getting better in September.
I would have to agree with you, especially, I mean, we're already seeing that happen across the board in terms of just transactions, right? Just because we operate in across the nation, we see markets fall, markets increase, and um, even markets like Texas and Florida, which got hit pretty hard in terms of
Mm-hmm.
an overall average price in listings, um, they're starting to pick back up again. People are starting to really get into those markets, and they're getting into the markets actually at a much better position than I would have,
Yeah.
hoped they would have gotten. Like they're doing the work now, right? But it's forcefully doing the work now versus 6 months ago to a year ago, it wasn't the same, right? Now they're forced to buy the properties at a lower price, which is better for them in turn, but they don't know it, right?
Yeah.
So I think that's we've seen transactions start to increase over the last 2 months already in terms of purchase
Yeah.
volume, refinance volume. People are actually starting to try to make a move. Um, I think though the dangerous part is I love the July and August thing and hopefully better in September. That means that our window for investors and everyone to make a great deal is getting shorter, right? So now
That's exactly right.
if if you were doing the work from January to now, which a lot of people have been, great. Continue to do that because our window of opportunity is getting smaller. And right now, if you look on the market, there's so much inventory, right? I think in most markets, in a general sense, obviously pockets have less inventories, but if you look at a market in general sense, so much inventory for people to try to make an offer that's going to fit your needs and your investing needs, rather than just going for, I'm going to make an offer and hope it gets accepted. Now you have a chance where now sellers are actually saying, we're entertaining all offers, give us what's needed, and then you can provide the
Yeah.
buyer's market criteria that fits your buy box.
No, that's exactly right. That's one thing I want people to realize. If you've been doing the work like I have in my market, I'm now telling myself I've got 2 months and I need to redouble or retriple my efforts to find that motivated seller. Because again, I want to get a great deal when inventory is up and most buyers are on the sidelines. And again, I expect them to be on the sidelines through the summer. But if you just fast forward till September, what might happen? Well, there's a couple of things. We might have 30-year mortgage rates below 6%. We might, right? The 10-year note falls a little bit. We get margin compression. We're still sitting at 250 basis points when it used to be 185. You get margin compression from lack of activity. You get banks competing. That could happen. You get Fannie and Freddie to come out and try to, stimulate home purchases. That could happen. You could have Fed rate cuts. And again, the last thing I'll say is the consumer is a predictable creature. Predictable. And we've done it on my channel for years. Right now, the consumer in general is still very much uncertain. But they've now been uncertain for 3 or 4 months. Typically speaking, consumers can only act non-normal, which again, we're a consumer-based economy, for about 6 months. History says that they can conserve, they can be afraid for 6 months. And then what happens after 6 months is they go, oh, nothing bad happened. We're okay. We survived. And then they start spending, they start making moves. And if you put, 6 months on March or April and you add 6, you very much get to September, October. And if you go to September, October, you got a 5.99 30-year mortgage rate. Transactions will go up, folks. That's the dominoes I see. That's all the the crash bros being wrong yet again. And I'm just putting it out there because I really think this is going to happen in the next 60, 65 days or so.
Yeah, and I mean, kind of semi touching on the topic we talked about, for the last few months, but like if you want to get to that 599 part, that DSCR, like we talked about it a few months ago, but for investors that are experienced, 1.2 DSCR, 25% down, you're looking at a low 6 rate to start, right? You're looking at 6.3, 6.4, 6.2. So we're already kind of in that realm. And then if you want to go even lower, you can go lower, buying it down to 6% or 5.875 if that comes back a little bit. Like there's options there, right? For people to kind of get into the market that's going to be in the future, you could pull it forward now, right? And I think that that's what a lot of smart buyers are doing right now is they are pulling forward to today the market that's going to exist in the future, right? This is probably, I would say, a smarter time to do the buy down so that later on you have the buy down now, you set it and forget it on a 30-year fix or whatever, and then call it when it comes September, great, you can now find another property at a lower rate to buy at a better cash flow position, something that, maybe didn't hit a 1.2 DSCR previously. Now you can buy it down from 599 to call it, 5.5. And in that case,
Mm-hmm.
if you can do that, then you do it again, you do the same work again there, and then pull the future to now so that you don't have to bank on rates constantly going down. Because what we've seen is, yes, we can make all these predictions for rates to maybe tinker down a little bit, but something could happen. We don't know, right? And we've seen it happen so many times where it just shoots back up, right?
Yeah,
So
yeah.
like, and we've seen conventional market, obviously on Fannie Freddie side, they adjust down quickly, but on non-QM side, they haven't moved as much. So we're still seeing a little bit of the disparity there, and I think that's something to keep track of as well.
Yeah, again, I think there's just a lot of things that are going this way. Again, we've got a scared consumer, uncertainty. I think that alleviates. We've got a president clearly wanting lower rates. and doing all he can to beat up Powell and the Fed. We've got a couple of Fed presidents saying July is on the table. Most are saying September. Either way, that's right around the corner. So it's going to be very interesting. And then you get these, the big beautiful bill or a version of it through, which has all these other incentives. And I think people are going to be shocked at how busy September is, September, October. And to your point, make the offers now. And again, if you're doing it in July and August, you should be asking for the moon, the stars, right? Get the price, get the credits, get the buy downs. There's nobody buying, right? The activity is not there. So ask for everything now. Might as well ask. The worst they can say is no.
Yeah, absolutely. I mean, I LA has been one of the markets that I've been obviously I live in, it's our backyard. And a lot of our clients that did a lot of 2 to 3 million to 5 to 10 million, those houses, they're sitting on the market longer than ever, right? And
Yeah.
they're willing, even the sellers that are selling, like that are our clients that develop these properties, are so open to seeing more offers than they used to, right? They're starting to contact us and others of like, hey, do you know anybody that might be interested in this property, right? And I think that when that starts to happen, it's an indicator to a lot of people that, let's say, have been waiting on the sidelines or trying to look for a good opportunity. Like, this is the opportunity to squeeze the margins of, people that thought they could sell at a certain price, but now they can't. Like, this passes too soon. Like, this too shall pass. Like, we're going to get back into a market where there's going to be bidding wars and this and that, where prices are starting to shoot back up. Like, we might enter that market and nobody knows when, but it could be at the snap of a finger. And that's just something that people need to be prepared for.
Yeah, and again, I'm not really talking bidding wars and all of that. It's just gonna be different because again, I think what happens in September as well is you also have all this wish pricing. Because again, one of the things that people don't understand when you talk about inventory being up 30%, it's not all real, in my opinion, because there's a percentage 10, 20, 30% that are basically listed hoping for a number, and that number is not reasonable today. So those listings will disappear. Either they will expire or they will be pulled off the market. And if you have 15% less inventory because of wish pricing disappear, you have this magic 599 reappear, and we're not in some nasty deep dark recession or World War III. The consumer the sidelines and again say, I'm tired of being scared. I'm going to do something. I'm going to make a move. And bingo bango, the fall housing market is better than expected.
Yeah, and I think the people just need to, obviously, people are watching the treasuries and they're watching Powell and everything. The market's like a hawk. Um, if you look at it from just like a lateral or a bigger chart, besides just a 1 day drop, right? In terms of treasuries, you'll see that we are still above 4.2, still above 4. Like, we touched below 3.9 once. But if you look at it from an average, like, we're still within range in the last 2 years of rates being about the same. So
Yeah.
because I get calls all the time from people saying rates dropped today. And I said, yes, if you look at it from a 1 day chart, yes, it looks like it dropped. But if you zoom out to even a
Right.
month, you'll see, or 2 months, you'll see it's kind of flat. So I think it's
Yeah.
something that people should not be reactionary on it, but just make the deal fit the whatever the market's at, right? Like we talk about.
Yeah.
Make the deal, make sure the
Yeah,
deal fits
make the
it,
deal
not
work
the
with
rate.
this, the cost of
Yeah,
capital. Yeah, make the cost of
exactly.
capital work. Well, the other thing that happened, it was either yesterday or the day before, Polte, the head of FHFA, came out and said he wants to have crypto count towards housing. Is this just asset based lending, or what is he talking about?
Yeah, I think it's just another avenue of asset-based lending because they already have asset-based lending available where you can pull forward, like, let's say you have $1 million in an account, you can divide that up by a certain number of months and then apply it to your monthly income. But they only allowed that previously for stocks and if you're retired, retirement accounts and whatnot.
Oh,
Now, what they might be doing is they might add, crypto to that and then say,
hmm,
here's, a certain seasoned amount of crypto that's been sitting in there, and that can be used in the same manner to use for assets as income to apply
got it.
towards your monthly income situation. Or because I think a lot of these people don't want to sell, right? That's the main thing. They want to hold it in there.
Yeah.
So I don't know if you remember, but actually, like, maybe 3.5 years ago, so we actually did have a program that some people took advantage of to allow for you to use crypto for like pledged assets to use against the property for down
Wow.
payment. That was a long time ago. Right now, it
Okay.
feels like a long time ago. With this coming back, I might I'm seeing that potentially be on the horizon, right? Not just be used as assets as income, but also be able to be used as kind of a pledged asset
Like
to
collateral.
potentially
Yeah.
be exactly because that
Yeah.
was a big craze like when we had the product 3.5 years ago, and I think now it might start becoming more of a thing. Obviously, I don't think it'll go for all cryptocurrencies.
Sure.
Like, there's not going to be meme coins that are going to be doing that. Maybe more
Yeah.
stabilized assets, but if in the case of like right now, like it's something that's already available in the non-conventional market. If they just make it conventional, I feel like then at that point, the non-conventional market might turn the product into something a little more aggressive, which means cryptocurrency can be used, like I said, as collateralized assets or
Mm.
as I don't know, you could draw from it as income or something like that, where it becomes actual usable capital versus just a store of value.
Got it.
Especially if conventional brings it forward. And I think obviously it's not released yet, and mortgages are typically the real estate industry is very archaic and slow. So I don't know when it'll be released because they've, just like they were talking about the 40-year mortgages and all that stuff back in the day. We're not sure what'll happen, but that avenue being open is definitely something to watch
Yeah.
out for a lot of investors. Yeah.
Yeah. It wouldn't shock me if there's, a top 2, top 5 list of crypto that they say, hey, this could be a pledged asset. That makes sense to me. And again, you're right. There's a lot of, holders out there that never want to sell it. So it's kind of just like, one of the things that, the rich do, like Elon Musk, is they don't take a salary. They just own the businesses and they take loans against those assets. So it's kind of the same idea.
Yeah, exactly. And I think
Yeah.
we'll see more avenues come out. The more aggressive that conventional markets get on different ways to qualify, like we're going to see a lot more avenues for non-conventional markets that are even more aggressive than that market because
Sure.
they're setting the baseline. Yeah.
No, I think that's exactly right. Well, if somebody wanted to reach out to Convoy and get something started doing these short last windows or see what's what in mortgage, what do they do?
Go to convoyhomeloans.com and let us know you came for more at.
All right, buddy. I appreciate you. Have a good week.
All right. Bye.